What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me today. Today, we're going to look over Thursday's best charts. We had several pairs that set up really nice in the session. Well engineered charts. We're going to take a look at that. And just because these were good trades doesn't mean you're always going to get a trade, okay? In fact, today I took a loss on the NASDAQ. I kind of FOMO'd into the market in a moment of weakness, all right, which is hilarious that I just did a trading psychology video yesterday. That's been on my mind. And then I get in there and do it. It's like a self-fulfilling prophecy or something. But anyway, man, anyway, we're going to take a look at those trades. We're also going to go over a few quick slides just to go over this daily process that we're using when we come to our charts during our session, okay? Now, this slide here, we have it labeled yesterday's high and yesterday's low. That could be whichever high and low, okay? That could be the high and low of the current day. It could be the high or the low from a previous session. It could be from the previous week, right? It could be any of these levels, okay? But just for the slides, we're using yesterday's high and yesterday's low. So above the previous day's high, there are buy orders there. There is liquidity there waiting to be absorbed into this market, okay? Below the lows, there are sell orders there. Again, liquidity waiting to be absorbed into this market. So imagine there's a big player that wants to sell a large order. Okay. If they're selling, they need buyers on the other side of this market. Where are they going to find a lot of buyers? Right? They're going to find those buy orders above the previous day's high. Okay. There are breakout orders stationed there. Okay. There are also stop loss orders from traders who were selling the market from that level the previous day who happen to still be in this market. All right. And you got to remember, this is a level, it's an area, it's a zone, it's not a specific price point. Even though yesterday's high of day is a specific price point, we're using a level, an area, okay? You understand that? So this is important. The market is not random, all right? It moves to objectives. It moves from high to low and from low to high. And this will be very clear on a well-engineered chart, all right? So we're marking off the previous day's levels and we're training our eyes to move sideways at those levels, horizontally at those levels. If we're zoomed in and we're looking at the market on a candle by candle basis, this is more of a vertical standpoint, all right? So we want to zoom out, look at those levels and train our eyes to move horizontally and observe how price behaves at those levels. We don't need to actually read candles until we break a level, right? Or until we trigger a level and we're looking for entry criteria. So there is liquidity, pardon the spelling, or money sitting at those levels that is needed to buy low or sell high. So back to this example, where would they find those buyers? Smart money can just sit back and wait patiently for price to return to the previous day's high, triggering those buy orders into the market and selling aggressively into those buyers, causing the market to dramatically fall. In this case, the buyers took the loss as smart money sets up a sell high scenario. And that's the entire name of the game, right? Buy low and sell high. We are trying to buy low and sell high when other time frame traders are triggered into the market. Okay. So daily time frame traders are potentially triggered into this market at the break of a daily level. Weekly time frame traders may be triggered in at the break of a weekly level. When we break a session high or a session low or the current day's high and low, we have 4-hour traders that are triggered into this market. Either way, we are triggering other time frame traders into this market for the move. All right. So here we're looking at the Australian dollar and the US dollar, and we're just looking at the levels, bro. We're not really going to be talking about trades. We're not necessarily looking at entries. We're just looking at the levels. All right. So you can see by the time we come to New York, right, we have this low of the day area down here. We have this high of the day area right here. And there's a third level that we care about, which is the previous day's closing price. On my charts, that's this yellow line, okay? And we'll talk more about that in a future video. But you can see we have this high, this low. Going into that New York session, this market is dumping down from the high that it just put in place, right? It's dumping down through closing price, through these London lows, back into the low of the day level, and then reversing and going from low of day to high of day. Here we're looking at Bitcoin. You can see we have a low of the current day level, a high of the current day level, which is also the London highs. This market coils sideways going into the New York session and pumps back up into that London level, retesting those London highs, triggering those orders in that we were talking about, and then selling aggressively into those buyers, right? High of day to low of day, from level to level, from objective to objective. Here we're looking at the DJ30. Again, before that green window, which starts at 8 a.m., we have this low of the day level, this high of the day level, and there's the previous day's closing price. You can see this market puts in a new high of the day and then dumps all the way back down through those London lows, back into closing price, back into the low of the day level before going parabolic from the low of the day to the high of the day, again from level to level. And if you notice, all of these charts, all of these well-engineered charts are triggering levels, whether those are 4-hour levels, whether they're daily levels, all right? Here we're looking at the US dollar, Canadian dollar. We have a current low of the day, high of the day before we get to New York. When we are going into this New York timing window, this is an example of some later trades in the session, right? We are breaking out of the current day's high. We've broken out of those London highs, triggering those orders into the market and then selling into those buyers, right? From high of day back down here into the lows, from high of session to low of session. And here we're looking at gold. This was a great trade. I wasn't able to be there for the session, but again, we have our current low of the day that was put in place in this gap time, current high of the day, which was put in place in the London, New York gap time. Coming into that 8:30 opening, right? Gold opens a little earlier than our indexes. We're dumping back down to that low of the day level, right? Working the low. This market reverses and we go from low of day to high of day. Here's the US dollar, Japanese yen. We're also going to look at one continuation example just because it was a nice chart, but this is the US dollar, Japanese yen. Again, low of the day, high of the day coming into New York. We break out of those London highs, breaking out of the current high of the day, and then reversing and dropping from high of day to closing price, okay, back into these London lows, high of session to low of session, from level to level. All right, because we have these 8 a.m. lows. Okay, we go right through those 8 a.m. lows. There's liquidity there too, okay? But we want to focus on these external points of liquidity. We want to trade on the outside of the market, right? So this is our continuation pattern for the day. The US dollar, Swiss franc. You can see we have a low, we have a high, and then again, we could even use this. We have our high of Tokyo, high of London, low of London. Going into that timing window, right? We break out early. We break out of those London highs. We break out of the current day's high. We pull back to that level, 9:30 timing window, 9:45. We go parabolic, okay? For the continuation trade to put in the next high of the day level. This is the only example on my watch list of this type of trade today. And I just wanted to show you this, you know, it's different than these trades. Okay. So if you're looking for reversals, you might take a loss like I did today on the NASDAQ, right? We broke some levels. I was impatient. Like I said, I got to the markets late. I was trying to take a trade. I got in there and I took a small loss. You know what I'm saying? It was a negligible loss. I was averaging in. So I had a very small position in there, took a small loss, and it's all good. We'll be back tomorrow doing the exact same thing, man. Until then, I hope you continue to free your mind.